There's no question in my mind that will be approved. Never say, well, but the other ones are ahead of them. I don't care. They will not be approved.
Welcome back to Library of Wealth. Today we have Cathie Wood and Mark Yusko giving their prediction for Bitcoin and why now is the time to invest. Bitcoin, being the most well-known cryptocurrency, has garnered significant attention from both retail and institutional investors recently. Cathie Wood presents a bullish case for Bitcoin, doubling down on her price target of $1.5 million and when we can expect to see it. She highlights the importance of Bitcoin as a flight to safety asset, akin to an insurance policy, offering protection against wealth confiscation. She points out that Bitcoin acts as a hedge against counterparty risk, given its decentralized and transparent nature. Mark Yusko discusses the cyclical nature of Bitcoin's price movements. He emphasizes that Bitcoin operates on a 4-year cycle, where block rewards are halved, leading to either an increase in price or potential bankruptcy for some miners. He terms the current phase as crypto summer, leading up to the halving event, and explains that the reduced supply of new Bitcoins often attracts investors seeking to accumulate assets below fair value. Yusko also highlights the potential for parabolic price increases during the cycle's fall period. He cautions that leverage can lead to excessive price movements, as seen in the stock market, and expects a blow-off peak in 2024, coinciding with the next halving event. Let's get into the latest interview with Cathie Wood and Mark Yusko as they give their Bitcoin and crypto predictions for the coming months. Don't forget to share your thoughts and comments down below and leave a like if you enjoy the content we do here.
Our bull case is it's 1.5 million. The base case is 625,000, something like that. Now, one reason our confidence has increased towards the bull case is because of what happened during the regional bank crisis in March. What happened? As regional banks are going bankrupt and the stocks are imploding across the board for the KRE, Bitcoin rallied from 19,000 to 30,000. Why did that happen? That was a flight to safety. That is the insurance policy that we are talking about, that we believe everyone will want at the end of the day. Insurance policy against two things: confiscation of wealth, either directly or by inflation, or in the deflation world, what is it a hedge against? It's a hedge against counterparty risk. We won't have an 0809 with Bitcoin. Everything is decentralized and transparent. No obfuscation.
The point was, there's a 4-year cycle, and there's going to be a 4-year cycle because it's coded into Bitcoin. Every 4 years, the block rewards get cut in half, and therefore, one of two things has to happen. Either a large number of the miners have to go bankrupt because their costs are basically fixed, or the price has to rise. And that's a pretty cool thing, because what happens is as the price rises, it attracts attention. And so what happens every 4 years is we have these seasons. And today we're in crypto summer. Well, what is crypto summer? Summer is the period leading up to the halving, the year before the halving. And that means we drift from below fair value. Now, why are we below fair value? Well, because we had winter 2 seasons ago that pushes the price down. Well, why does winter happen? Well, because people freak out because of the parabolic top in the previous fall. And then we go through spring, which is kind of the bottoming process. That ended, I think, from June to June. And now we're back in summer. Well, the Metcalfe's Law model that Tim Peterson, that I use, says fair value is 55K. Investors, people who buy things below fair value, that's what an investor's supposed to do, would be accumulating Bitcoin here, right? That's not the point. The point is leverage. Margin debt is accelerating again. And so leverage is causing prices to be crazy. So we're in a parabolic blow-off peak in stocks, I believe. And we will have another parabolic blow-off peak kind of late 2024. Halving happens April, May. By the end of that year, we'll be in the parabolic. And look, in the previous peaks, fair value was X. We got to 2, 3, 4 times fair value. When we hit 60, the model said fair value was 20. It had been up to 30 and it had fallen to 20. Because remember, transaction volume fell and everybody was afraid. And so we got to 3x because of the crazy Binance 100 times leverage and all the stupid stuff. And that's fine. In the previous cycle in 2017, we got to 2 times fair value was 10. We got to 20. Okay, that's fine. So this time, fair value will accrete according to the model. If things stay the way they are, fair value will accrete to around 100K by the halving. I don't think we get to 3, but could we go to 2? Sure. That's just supply and demand, right? Because you got the hodlers who are going to hodl. They're not selling. Here's the funny thing. Everybody's like, oh, there are excess buyers in the market. Oh, there are excess sellers in the market. No, there's not. There's always an equal number of buyers and sellers. Every transaction, in every security, in every asset, in every commodity, in everything, always has to have a buyer and a seller. I cannot just buy stuff out of thin air. So this idea that if an ETF, when the BlackRock ETF is approved, the BlackRock ETF will be approved. There is no question in my mind that will be approved. Everybody says, well, but the other ones are ahead of them. I don't care. They will not be approved. The BlackRock will be approved. After that, maybe someone else will get approved just so they can kind of cover their tracks. But BlackRock's going to get approved. So that's going to cause increasing demand. There is a finite supply. So there's the first finite supply, meaning there's only going to ever be 21 million because there's been some that's lost or stolen. You got the Satoshi wallet that's never going to move. You got all kinds of stuff. And the incremental change in Bitcoins, by some estimates, is about 10, 11% of the coins. If hundreds of billions, which I think is a reasonable estimate, comes into the market, and we're talking, let's say 200 billion comes in, and there's only 60 billion of available supply for sale, price will rise. That's just supply and demand, right? You shift the demand curve, the price will rise. That will cause more people to come in. That will cause some leverage, but I think this time the leverage won't be as great.
Yusko believes in the concept of fair value for Bitcoin, driven by its underlying technology and network effects, as captured by Metcalfe's law. He suggests that the fair value is around 55,000, and the price should converge towards it over time. The supply and demand dynamics of Bitcoin play a significant role in its price movements, with institutional adoption and finite supply contributing to potential price appreciation. Cathie Wood and Mark Yusko both recognize the potential impact of regulatory approvals, such as the awaited BlackRock ETF, on increasing demand for Bitcoin. What do you think about the latest interview with Mark Yusko and Cathie Wood? And what's your opinion on Bitcoin's trajectory in the coming months? Comment down below. Thanks so much for watching. Don't forget to hit the like button and subscribe for more content just like this. We'll see you in the next video.